Okay, what are we going to do today? We're going to talk a little bit about how this year's been going. Uh, it's been interesting. Inflation. Inflation is one of the big things we're hearing about. Did anybody hear what the new numbers were for last month? What was the yeah, 8.2%. And they thought it was going to be 8.1. They were optimistic. I'm not sure that 10 basis points really makes that much difference. But at the end of the day, it came in a lot worse than we all thought it was going to be 6 months ago. So this is lingering. And the knowledgeable people, if you will, or the people who kind of know what's going on from an economic standpoint, really feel this is going to be taking months and months and months to rectify the inflation aspect of this. Now, when you think about the Fed relative to the inflation, the Fed has basically two big tools in their arsenal to try to get things under control. You've got interest rates, or they could buy and sell assets. Well, most people are familiar with the Fed and the interest rates. I mean, we've got another one where the Fed are going to meet and determine whether they're going to raise rates again. So from a federal standpoint, you've got the open market committee that gets together, looks at all the economic data, and then makes a determination. Do we lower rates? Do we raise rates? Do we keep them the same? And as you all know, over the last 3 hikes that we've had, they've gone to raising the rates up. And the unfortunate part with this, and I understand what they're trying to do, they're trying to slow the economy down and hopefully slow inflation down. But you've got two major factors out there that are going to create problems for the Fed. Number one is energy. You know, as long as energy cost is up, that is inflationary big time to the extent that inflation or the energy rate is so high. Just think about it. This country runs on energy. You can't get a truck from the West Coast to the East Coast without what? Energy, oil. And the prices are really high. So anytime that you have a cost to a business that goes up, guess who it gets passed on to? Passed on to us. And that's where the inflation starts coming into play. The other issue out there is wages. I mean, when you think about wages, wages have gone up dramatically. I mean, you want a decent paying job? Just go to McDonald's. You get $15 an hour. So if you've got those two issues that are not being addressed, and you're not going to address the wage issue, because when wages go up, do they ever come down? Not really. They kind of stay up there. So the other factor that can really play a big part is the energy. If we can get the energy costs back down, we can actually kind of soften this landing that we have here. So let's go back to Feds and the rates. This is actually, in this environment, a little bit inflationary in that when the Feds raise rates to borrow and businesses now have to pay more to borrow, what does that do again? Raises their cost, and what happens then? They raise their prices, and we pay a higher rate on it. So this is a challenge for the Fed. And it doesn't look like they're going to slow down. We had 50 basis points, 75 basis points, another 75. And the wind blowing the way it is, we're probably looking at another 75 basis points. If they follow historical precedents, they'll try to get the interest rates up as high as inflation. Wow. And, you know, never really worked that well in the past. I mean, if you think about it, it always sends us into a recession when they start raising rates the way they do. They've just got a real challenge right now. Now, the other one is buying or selling assets. And this is the one that most people aren't really aware of, but this is probably a bigger issue than the interest rates right now. So what the Fed does is they go and buy treasuries and securities from banks. And then they replace it with credit. What does that mean? Yeah, they're basically printing money. They're borrowing something that they don't have. So at the end of the day, we've got this balance sheet of debt on the Fed side.